Hello and welcome. Thank you for joining us. This is Business Incorporated coming to you live from Lagos, Nigeria. I'm Chimeze Obi Iwago. On the show today, 2 diamonds larger than 100 carats each found in Lesotho mine. Libyan oil revenues up sharply in 2017. Plus, we'll be looking at Nigeria and the global climate deal and outlook for 2018. We get started off now with the markets, and here on the African continent, all the markets are looking green at intraday. The Nigerian stock market is still waxing strong, with the index crossing the 39,000 mark at midday, up 0.47%, thanks to the gains in the oil and gas and industrial sectors. The South African JSE index was up 0.23%, while Egypt was up 0.71%, outperforming its peers at intraday. However, in Nairobi, the market closed bullish 1.46% on Friday. In the Middle East, stock markets were mostly higher at intraday, with Qatar outperforming for a second day as investors bought to secure dividends. The Qatari stock index gained 2.57% as Islamic Bank Masraf Al Rayan added 1.9%, and Qatari Investors Group surged 7.1%. Qatari companies, which traditionally pay high dividend yields, are due to announce fourth quarter annual dividends in the next few weeks, and yields may be boosted this year by the fact that stock prices have been pushed lower by the economic embargo imposed by 4 Arab states on Qatar. In Saudi Arabia, the index edged up 0.12% as consumer electronics retailer United Electronics Company gained 3% after seeing estimated fourth quarter net profit climbed to 57.6 million reals from 26.3 million reals a year ago, as sales rose to 1.61 billion reals from 1.39 billion reals. The Dubai index was only marginally higher, 0.55%, but builder Drake & Skoll, the most heavily traded stock, gained 1.7% after saying it had completed restructuring its corporate bank debt and had secured new credit lines and working capital facilities for its projects. Abu Dhabi was up 0.64%. To Europe now, markets moved higher in early trade after a firm lead by U.S. stocks in the previous session, and as Germany looks closer to forming a new government. There are other market-moving news out of the Eurozone. My colleague in Frankfurt, Daniel Koop, has some to share with us. Good afternoon, Daniel. A beautiful week to you.
Yeah, good afternoon to you, Chimi. Beautiful week. Let's start into an exciting trading week here at the Frankfurt Stock Exchange.
I can feel that excitement in your voice. Anyway, the CEO of the German central bank, or what you call Bundesbank, is asking the ECB to stop its multi-billion-dollar bond purchase program. How are investors reacting, and why is Draghi so in favor of this program?
Yeah, Jens Weidmann, the CEO of the German central bank, the Deutsche Bundesbank, has been very clear about this issue already in the past. He is clearly saying that there should be a stop of the bond purchasing program. Just, to keep you again in the loop, I mean, we really have this, what many countries outside of Europe are most likely going to call absurd, this scenario here in the Eurozone that we have a 0% interest rate policy. Many countries around the world have much higher interest rates. Then we have a bond purchasing program that was cut down now in January from 60 billion euros a month to just 30 billion euros a month. All of this was happening during the financial crisis that we have seen here in Europe to keep countries like Greece, like Italy, and like Spain still going and still growing because many people were fearing that they might run into bankruptcy. But now, when you look at the financial situation here in Europe, the situation has much more improved. We are also very close to the 2% target when it comes to the inflation rate here in the Eurozone. But Mario Draghi has been very clear in the past. Well, from the moment he's cutting the bond purchasing program to 30 billion euros a month, but at the same time it was extended. So now the Bundesbank CEO is really saying that there needs to be a change, a dramatic change, that this program is not anymore necessary, and that those billions of euros every month being pumped from the European Central Bank into the market is not anymore necessary. And also that's what investors here at the stock market are telling me as well. They're really calling for a change of this program. Now in January we are going to have another meeting of the European Central Bank taking place here in Frankfurt, just a few blocks away from where I'm standing at the moment. Everybody will be monitoring very closely what Mario Draghi is going to say. Some are thinking that maybe in fall, that's now the timing until when the bond purchasing program was extended, that maybe after this it might really be terminated. So this is going to be really interesting. But higher interest rates, you can most likely forget in the next years. Some are saying that this could happening at the earliest time in 2019.
Right, we both just have to keep a tab on that speech by Draghi, and perhaps we talk about that as the week goes by. Now, 2018 is set to be a great year with many interesting IPOs like Uber, Spotify, Healthineers, and Saudi Aramco. Which is the most interesting one for traders at your end? And why are IPOs still interesting for companies with near zero interest rate policy across the EU?
Yeah, very interesting IPO here. All those tech companies that are going to enter the market, since those shares of those companies are always very unpredictable. We also remember when Snapchat was launching on Wall Street. At the beginning, there was this big hype, then shares were dropping. I guess two IPOs from the Frankfurt perspective, at least, are really sticking out. First, the one in Saudi Arabia, Aramco, this gigantic company. It would be the biggest IPO that we have seen worldwide happening, worth more than 100 billion US dollars. Many investors are telling me that they really feel that the future of Saudi Arabia really depends on how successful this IPO is going to be. Saudi Arabia, a country very much depending on the oil market, really needs other ways also to get money in, also with an oil price that has been going up and down, and is also very unpredictable for the country. This also is going to mean lots of pressure for the crown prince of Saudi Arabia, Mohammed bin Salman. He has been trying in the past to open the country more for foreign investors. So this IPO very much on the focus and very much on the mind of investors. But then also Healthineers, the company that belongs to Siemens here in Germany. This could be the biggest IPO happening here at the Frankfurt Stock Exchange in more than 20 years. The biggest one that we have seen 20 years ago was the launch of Deutsche Telekom, the German telecommunication company. By that time, there was really this big hype of investors when it came to this IPO. Siemens is hoping to have the same hype again. It really seems that they are a little bit in a rush. We heard some weeks ago that this IPO launch most likely is going to be taking place in June or July. Now we are hearing that it could happen already before Easter. Why is this happening? Well, in general, we see very good market conditions here in Europe, but also on Wall Street, with this new record last week of 25,000 points. Also here in Frankfurt, we're seeing that there's really a rally happening at the beginning now of 2018. It really seems that Siemens wants to benefit by all of this. So yeah, very exciting IPO year happening, and we'll be talking about all those IPOs in the coming weeks and months, Jimmy.
Right, let's look at the other side of the Atlantic. Emerging markets guru Mark Mobius is announced to be departing Franklin Templeton on January 31 after 30 years on Wall Street. Will traders and investors miss this great market figure, and why? Well, by many investors, he's really considered as a guru of the
stock markets worldwide. I mean, we just have to remember he's 81 years old now. He's saying that he wants to retire. Many investors are talking today here also at the stock market about all the big achievements that he has been doing, still working so long. You know, with his very old age, he was still a team leader, leading more than 50 employees and a total of 28 billion euros. So, yeah, many people here at the stock market are talking about him today, about all of his achievements. And, yeah, he's going to be missed in the financial world.
A lot of good legacies he has left there. Thank you very much, Daniel, for your time. Well, the week has just started. We'll have a lot to talk about in the course of the week. Enjoy the rest of the day.